A corporation basically, and this is legal speak here, and you didn't do this, so, is an entity that acts like a natural person. It lives and breathes all on its own, okay? And the ones that you commonly hear about, aside from LLCs, which I'm going to talk about next, are S corporations and C corporations. That's what most corporations set them up as. And this is, I'm not going to get into the difference of both. Again, if you decide to incorporate your business, you would definitely want to talk to an accountant and probably an attorney to say which is best for me. Because the difference between the two usually has to do with financial issues, taxation, that kind of stuff. And that's not what I'm here today to talk about. My point today is if you are going to set up an S or C corporation, I highly recommend you talk to an attorney, okay? Don't let that pass. The pros of doing this is, you know, to run it, there's kind of a, with what's called a corporate form. There's certain things that you need to do. You have articles of organization, you have annual meetings, and you do some things like that. And it really, the reason I say that's a pro is that you have a thing, you know, it's a formula. You got to follow it, all right? So it kind of keeps you on track. It does protect your assets personally because, again, this is a separate entity. It gives you some flexibility, particularly with S Corps and C Corps, to how you make or bring money into the business. You can take investors, sell shares in your company, and do that kind of stuff. You can sell stock in your business to raise funds, you know, by going public if you wanted to. So, like a company that I started out as an LLC. As soon as an outside investor came in and we wanted to have shares in our company, we switched to, I think we switched to an S Corp, if I remember correctly. Switched to an S Corp from the LLC so we could have more flexibility in raising capital for the company, okay? All right, LLC is basically a hybrid between partnerships and corporations. That's the way I look at it. It is, the reason most people do set these up is it limits your personal liability but gives you options to tax the entity like a corporation. Okay, and that's why these are so popular, and they're also popular because they're easy to set up. But the main reason that most people do it is to limit their liability. So to give you an example, I had a guy come in next door at the big center, and he had an excavating business, and he wanted to kind of take it up to the next level. He wanted to hire some people and buy some new equipment, so he came to Kentucky Highlands looking for a loan, and we made a loan with him. But the first day he walked in there, I said, "So right now, what are you doing?" He said, "Well, it's me, and I have a few contract employees, and I got a backhoe and a dump truck." Okay, and I said, "Are you set up as an LLC?" He says, "No." And I said, "Before we will even discuss this with you, you need to go set up yourself as an LLC. And why?" Okay, first of all, he's got contract employees that he's responsible for, who've got these big things that have arms going around like that, swinging around the public. All right. So all one of his contract employees has to do is whack somebody on the head with one of those things, and he's going to get sued. And like I said earlier, he's set up as he's officially a sole proprietor. He's going to get sued, and his house is going to be on the line. His car, his wife's car, his fishing boat, everything's on the line if he gets sued. Okay, so he did it immediately. Now, LLCs, I say it's relatively new. In the past 10 to 15 years. I mean, when I say relatively new, 15 years seems like a long time, but in the business world it's not. And it is the most popular form of business today. I looked yesterday, if I remember the number correctly, but of all the entities set up in the state of Kentucky, both profit, nonprofit, and all that, it was like 68% of them were LLCs. So it's definitely the most popular way to go. The pros is it's very easy to set up. You file your articles of organization with the Secretary of State, record them with the county clerk, and you're in business. And it is easy to do. Secretary of State has a website, and on their website, it's very, very plain, very simple to do. You go on there, it really walks you through the process electronically, page to page to page, or you can just print out the form and fill it in. That's what I set up LLCs here and there. My wife's got one, and a friend of mine asked me to do it. It's a one-page form. You fill it out, you mail it in, and it's, I think last time I did it, it's $40 for registering the LLC and $15 to secure the name, I think. And you just did that, didn't you, David? So I think I'm right on that. So it's inexpensive to do, and then basically you're done. And the only thing that you have to do going forward is every year the Secretary of State is going to send you a little postcard. And they're going to say, you need to file your annual report. And you know what the annual report is? Your little postcard, right? You got to sign it. I guess $15, I think. $15, send it in, boom, you're done. Okay? Don't forget to do that, because that really what the Secretary of State's doing is just checking to see if you're still in business. That's all they're doing. And if you don't send it in, they're going to assume you're out of business and they're going to close your LLC. All right? Then that gets messy if you go to file your taxes and they don't know who you are and that kind of stuff. So just send that card in. Yes?
What's the website to print that off?
It is, well, I tell you what, if you just Google Kentucky Secretary of State and it'll take you right to it.
Okay, thank you.
Can't remember. Yes. SOS. Yeah. Yeah. So very, very easy to do. The cons to setting up an LLC, and I said this was a pro earlier, I kind of call it a con for an LLC only because of people's attitudes, is you do have to follow that corporate form. You are a corporation, all right? Let me give you an example of what I mean there. So my wife has an LLC, and she's a single individual member of that LLC. And her business is helping senior citizens downsize from, say, their family home to a patio home, assisted living facility. Well, not a whole lot of exposure, but let's say she's, moving, and, she's, helping the movers move this chest, and it falls over and hits the senior citizen who happens to be sitting there, all right? So there's some liability. So she set up an LLC. Now, if this person takes her to court, their attorney's going to be on one side, and hers is going to be on the other. And our attorney's, of course, going to be arguing that this is an LLC and, it protects, the Carroll's property and all that kind of stuff. Well, if their attorney's smart, and they probably are, they're going to say, Judge, would you ask them to produce the minutes of their annual meeting, their articles of organization, blah, blah, blah. And if we went, we don't have that. We don't do that stuff. Their attorney's going to argue that the LLC is just a sham or a screen for liability and that we should be personally liable too. And it'd be a good argument. So my wife and I sit down every January, across the desk from each other. I take my notepad out because I'm the secretary, and I take notes of the minutes of our annual meeting and file them away. All right. So you still have to act like a corporation, even if you're an individual member of an LLC. I highly recommend that you do that. It can be somewhat limiting on how you operate over a sole proprietorship. I won't get into that, but it's there might be some limitations. But the one reason that a sole proprietor from a financial standpoint may choose not to do an LLC, in essence, they get double taxed, meaning the business gets taxed for its revenue, okay, or its profits. And if you pay yourself from that LLC to you personally, there's income tax involved there too. So you can look at it as saying, it's kind of double taxed, and to a certain extent it is. But a lot of people, and I'd say the majority of LLCs, if they're doing their accounting right, they're really doing a good job of balancing their profits. Making sure they're expensing things they should, go against their revenues and that kind of stuff. Again, it's an accounting thing that I'm in an accounting class today.
Yeah, just a quick question. I'm not going to go deep on it. If you have an LLC and you're paying yourself $6,000, does that $1,000 get subtracted off of your profit?
That reduces your profit.
You're really not paying profit on that twice. It's just whether you.
But people feel that way. That's why I put it up there. People feel it. To a certain extent. If your company's showing a profit, you're paying pay taxes on the income coming out, and I'm still paying taxes on some revenue coming in. It kind of balances out. That's what you hear a lot of people say. I follow corporate form to pierce the corporate veil. Example, and there's a minimum tax. You're going to probably pay $170 whether you made a profit or not. You've got the filing fees, annual, and so there's some basic part to it. Tips is definitely execute an operating agreement, even if only one member. Operating agreement is basically an agreement that says, here's how we're going to do business. This is where should I get an attorney or not? stating, here's how we run our business, here's what we're doing, you know, he makes a decision, here's how our business is going, and stuff. He'll get a number from the IRS, certain account, and I particularly if your business is doing well, you're chunking money, you know, you get customers and getting some revenue, pay your taxes quarterly. If you get to the year, you got a bunch of money, report to the IRS, they may get back to you, quarterly, folks. I don't want you to here. But I recommend to most